anybody who is a starter or just want to start investment, forget about as a financial advisor, what advice you would give, what he should do initially to start with, let's say at the age of 21, 22, with the tools that are available?
Any money which you don't require maybe for like 5-7 years or which are slightly longer horizon, that money should be put into the.
Hi, we have a new guest today, Sridhar Vetapalem, who by education is an engineer, but working in a finance sector or industry for the last 20-25 years. Welcome, Sridhar, to the podcast.
Hi, Yogesh.
Hi.
Thanks for inviting me for this podcast. It's a pleasure to be here.
Oh, same here. So, before we go into the details of what you do or how the journey is, can you just brief about your background and how you moved into the finance after doing your education in engineering?
Yes. Actually, I'm a mechanical engineer by education. Passed out in '99. After that, I did my MBA in finance from SIBM Pune in 2003. The journey to get to the finance side is quite interesting. During my childhood, one of my friends was a neighbor friend was a Guju, and his family used to deal in mutual funds and certain financial instruments, and he was a very good friend, and then we used to keep talking, and that's how I got introduced to this field. In my 12th standard vacation, we used to go and sit with a broker, and during the summer vacation we used to look at how this stock market works and all. So that's how I got introduced, and these discussions led to my interest into this field. Of course, like a good child, I went and because parents said that you need to do engineering, so I did engineering, and from there, but my love for finance never stopped, and I kept on pursuing that field. And the easiest way to get into the financial side was to do an MBA. So I prepared for MBA, and I got into this field.
So now doing from engineering to finance, if I ask 100 people, 80 people wants to manage finances.
Right.
But it's very difficult because you don't know all the instruments, managing up and downs. So anybody who is a starter or just want to start investment, forget about as a financial advisor, what advice you would give, what he should do initially to start with, let's say at the age of 21, 22, with the tools that are available in the system now?
Yeah, so this is you're directly getting into the action side. Before that, there is some bit of things which need to be looked at. Generally, if you look at education in India, finance has never been covered as part of any course or any syllabus. In our engineering side also, there was one subject which was called as economics, but nothing to do with really money management. Okay. There are a lot of fundamental things which need to be considered when somebody is getting into their job. Basic how a bank account works, basic budgeting, like how to manage their income and expenses. So once all these things are looked at and focused,
Okay.
then a person can start gaining knowledge on these aspects. Okay. What most people look at directly is where I will get the maximum return.
And that may be the trend because of the reels and with so many social media things.
Yes, there is so much of information which is available today in the online space. Okay, that people are continuously being hit by different reels or different information or different people coming and suggesting them things, and everybody is only talking about how to make the maximum return. Okay, so the planning is never looked at, that you need to plan certain things. People are often decisions are taken that okay, I have this much money, where should I invest to get the maximum return? But when it comes to life and when it comes to where you want to go in your life, you need to start looking at the basics. The basics is that you need to start saving first, and then you need to have a plan as to how you are going to your financial journey is going to move. The savings, where it has to get invested. Okay, for that you need to understand different products which are there in the market, and this knowledge is not something which you can get in a day, or this you cannot get by just looking at few reels or few investment options. This knowledge will get built over a period of time as you will experience different investment options. So there is no specific methodology by which you can gain all of this knowledge in a very short time. But certain basic things, like right now, if somebody has money to invest and they have a slightly longer horizon, then they should look at doing SIPs, systematic investment into maybe mutual funds or different
So
options.
one of the my probably you answered my question, which was intended, is you are absolutely right. The people doesn't look at like what needs to be done and what goals they need to achieve. I remember when we started working together in 2009. I was novice. Like I did not know anything, and I was looking at the same returns, and if it is not, just sell it out.
Right.
Even invested in LICs and insurance funds and other
Right.
things.
Right.
And meeting with you working with you over the last 16, 17 years, now it has changed horizon. It needs a long term.
Right.
It needs to look at the goals, like when you need that money.
Correct.
You need to, like, I remember your first question was, give me your life goals.
Right.
It was never an investment part of it, and you need to achieve that goals. And you are too realistic in the sense, oh, if you want to do this, then you have so much things to add on, or you don't do this. So these sort of things has to be how you can give it to the people who are starting new. Reason being, as you said, everyone chases the returns and doesn't go into realistic way. So how the people needs to be educated on that?
Right. Okay. So let me break it down in a slightly simpler way for our audiences. First, we need to look at what stage the person is in their life. Okay. Suppose somebody is just started their career. Okay, they are young, they are single, maybe somewhere in their early 20s. Okay, for them, the focus should be that whatever I am earning right now. Okay, a maximum part of that I should save. Okay, because generally they are staying with their families, or even if they are staying alone, their expenses can be minimized, or it can be in a controlled way, that they don't go and over splurge the money. So they can start saving the maximum of the amount, and they can ask a question that what is the very short term goals. Maybe I will require some money if I get married in the next 3, 4, 5 years. Then how much startup capital I'll need to start my life once I get married. Okay, so for that kind of things, where the money will be required in a very short span,
and a huge number as well, and a bigger number.
Yes, so that kind of money you can basically put it into a safer place and start collecting that corpus. Any money which you don't require maybe for that 5, 7 years, or which are slightly longer horizon, that money should be put into the mutual funds, or something where slightly higher risk but the returns can be higher. Okay, so maybe equities.
So in
Right. Okay. This was so it depends on what stage they are in their life. If somebody is asking this question, they are already married, they have maybe one or two, they have their children in place. Then for them the things become different, because then the type of goals that they have in their life is children's education, probably if they don't have their own property, buying a house, then wedding expenses for the children. So all these goals will come sometime in the life in future. Okay, so for these kind of people, once these goals are identified, then you can make a financial plan, and you can plan accordingly. So frankly, it depends on what stage a person is in their life.
Okay. Now, one of the things is when you tell about these all the things, and used to tell these things I know earlier as well.
Right.
So, with the income levels rising across the board, with economy growing, with the opportunities coming in, how do you see the difference in the investment approach of the people earlier and now?
See, if I look at maybe 20, 25 years back, primarily in our parental generation, okay, most of the investment was, towards safer asset classes. People used to look at equity as an investment asset class with suspicion. That it is more, inclined to gambling, or, people just, lose money there, because they were not understanding how this investment option works. I think one of the primary investments which was there probably with each and every family was something like a LIC. Okay.
True.
But and that time, frankly, people didn't have too much of ability to save. The amount that used to save was also less, and the type of investment options were also quite limited. Okay, uh, so that was what was there in the past. But now, if you look at it, there has been an explosion in the financial space. Everything has moved digital. You can get loans using your phone. You can invest into different type of products
At the
on
fingertips.
your or on your
Fingertips.
using apps and all. And the market has exploded in such a way that the options are unlimited, and the people's income has also gone to such a level where they are able to save reasonable amount of money, and they are all chasing these type of different asset classes or different investment choices.
And earlier, like when our generation, we went through probably 2001 recession, then 2008-9 global recession. So a lot of new generation or the younger generation or Gen Z, what they call, they have not seen the recession the way we have seen. There was a COVID, but it was a very short term.
Yes, yes.
So how do you people look at when they do investment from that longer perspective in general?
So as if you look at the right approach to investing, okay, you need to have a lifetime kind of a view when you start investing. Okay, my investment is not going to be for 1 year, 2 year, 3 years, 5 years. It's going to be for my lifetime. So once you build this approach, okay, then all these short-term ups and downs like the COVID or the 2008 crisis, these are just events in your lifetime. Okay, such kind of events will keep happening in the future. But if you stick to the right philosophy of investing, all these events will just be part of that whole journey, those ups and downs, and your still your money will grow, and still you'll be able to create a corpus which is large enough to take care of all of your goals.
Okay. And similar with the way the apps have grown, way the system has grown, knowledge has grown, the financial advisors are also plenty.
Right.
Like there will be, if you open a certain amount with the bank will chase you. There are financial, then there are personal ones, then there are only the mutual fund distributors and other things.
Right.
So when you choose someone or you try to interact with someone or work with someone, what you should look for and how you should approach that part.
Okay, so
But it may not be right first time, so there may be learning. But how do you choose to avoid? Is the prevention better than cure?
so it's quite a difficult question to give you a straight answer to this. You need to find somebody with whom your interests are aligned. Okay, so if a advisor is looking at a win-win situation where he's able to help you grow, okay, and help you meet your goals in your life, and help you create a financial journey where you being on track, you are able to fulfill all your needs financially. Okay, if you find such an advisor, then you should never let such an advisor go. But to know this beforehand, it is very tough. Okay, so I always tell any new clients who keep coming that you don't have mistrust and you don't have trust initially. Okay, let your initial few months or years, maybe 2 3 years time, let it decide how whether the trust forms or no. Okay, based on how the interactions go and how the experiences are. And if you find somebody who is competent, okay, and who is working with a genuine interest, okay, to make sure that you are able to move towards achieving your goals in life, then you should not let such an advisor go. You have to build a lifetime relationship with such an advisor and be with them. uh, Currently, if you look at how the market is, if you look at banks, people who are working at banks or people who are working in financial institutions, okay, you need to understand from where they are earning their bread and butter. Okay, are they selling you a product and the product is paying certain commissions to the institutions, and from there they are getting their salaries? Then there is always going to be a pressure on them to sell you a product. Okay, their bread and butter is coming from selling you a product, not by helping you achieve your goals in life. Okay, so if you can understand how their earnings are, from where it is coming, and whether they are working still in your interest, so that is, I think, one of the ways to figure this part out.
So if I have to summarize, like you need a they say that you need a doctor in your family to get it as a second opinion or
Right.
take an opinion, good or bad or straightforward opinion. Similarly, there is a time now that has come that everyone should have a sort of a financial advisor whom they can bank upon, or like a punching bag when you have in doubts. Is that the correct way to go?
Yeah, to first of all find a genuine financial advisor whom you can go and ask. That itself is a question mark. From where will you find this? Uh,
But if you, let's say, find out, you should try to find out. That's what I'm saying without. Like you find a doctor, right? And you build a relation with him and you then trust over time.
Right.
He may not be MS, MD or something, but he will be MBBS, but he knows basic things what needs to be done.
Right.
Similar thing, the time has come or
yeah, so there are two ways about going about this. One is to evaluate whether your interests are aligned with that of the advisor. Okay. There is something called as the RIA model, which has been, which has come up over the last couple of years, and SEBI is trying to, push this, where there is a registered investment advisor. RIA means
yes,
they will earn money only when you pay them a fee.
correct.
Okay. They cannot earn as per law by selling you any product indirectly. Okay. So if you are paying them a fee, okay, you will stick with them only if they are doing a good job. Okay, so here the interests can be aligned. Okay, there may be people who are selling products. Okay, there you cannot know whether your interests are aligned. Okay, there may be genuine advisors, but for you to know whether the advisor is genuine or not, it will take a lot of time. It may take 3 years, it may take 5 years, it may take 10 years to know whether they are really working in your interest or they are selling you products just to earn a higher commission. Okay, so one is, if there are advisors who have been working since lot of years and they have clients who have had that good experience. Okay, if you can get those kind of references, that okay, this guy is genuine and he's working, he has helped me achieve so much in my life, and then of course that gives you an answer that okay, this I can trust this guy. Or if you can look at a RI model where there are advisors who are only charging you a fee and not earning anything indirectly. Okay, there the only question is whether the person is competent or not. Okay, if you find with your experience that that person has the competence to help you, then of course it will be in your interest.
No, I feel I'm myself lucky because we had a lot of interactions.
Yes.
Over the time, what needs to be done. I did not, when we made first time, your intention was to make me financially educated, which I have not done.
Right.
But I don't want to be as well, because if you manage well, then I don't have to worry about that. So in short, you need a one medical doctor and you need a one financial doctor in your family.
Right. Right.
To just keep a track on whether you do the right things or not. Because they look it from the perspective where they are not emotionally attached.
Right.
It's simply like buying house, buying car, where as an individual I am emotionally attached to buy this out, but whether it works financially, it becomes a separate altogether, whether it's financially viable or feasible or do it right time right now.
Correct. I remember our past discussions. I had told you don't go for this property, and
then I made a lot of money out of it. So,
so a genuine advisor, or who is working in your interest, has the ability to help you become financially free faster, or make sure that you don't make big mistakes which sets you back by a couple of years. Okay, if your interests are aligned and you find a competent guy, then I think that is your home doctor or your home financial doctor. That only will come with time, or
So to have these systems, or like having this platform or understanding the financial planning, are there any systems or any platform that people can look at how you can do that, or track my expenses and other things? How do you do that?
See, basically, frankly, I am a teacher at heart. I have designed a 30 hours of course module regarding investing, and I have been conducting these workshops since now 2008. I have been conducting these workshops at various companies, at various colleges, and frankly, if somebody is able to get the knowledge which I am trying to deliver in the 30 hours, their basics, fundamentals regarding what is investing, how money should get managed, how money works, and how it in your day-to-day life, what kind of decisions you need to take. Everything is, basically covered in that. Just to give you a gist. Okay. So if I'm able to, consolidate all of this knowledge which you are asking about right now into a 30 years of course module, uh, this is like years and years of knowledge which has been, condensed into this kind of a format. So there is lot of garbage, there is lot of information which is available. Okay, maybe 99.99% of that information is useless. There is only that 0.01% of information which can be, consolidated into such a short thing. That is what is will help you take the best decisions and evaluate, where you are in life and whether the person that you are dealing with is right for you or no. Okay, so it is. I think over future, when as in, when we'll keep doing, future sessions, we will discuss about, what that specific knowledge is. In the past, I've written articles, which has been published on Rediff website. This was, I think, between 2007 and 2011. Where I had, touched upon these specific, aspects. Right.
I remember connecting with you on through Rediff. You used to write for Rediffs and other things in the chat.
Right.
With the, as you said, with the time constraint, having the things. A quick last question is: there are a lot of influencers now with the scripts and with the people, and when a lot of people conduct the classes or they give a tips.
Right.
This younger generation with the reels things coming up, Instagram coming up. Now there is a recent case of Avdut Sate who has been fined by 600 crores by CBI and other things.
Right.
For conducting a training tips and all. So how much this is to be followed or how much this to be trusted in general? 100%, like, or you just take it as a source of information that you can think of looking at, because the numbers they give us something which is unbelievable.
See, my question is very simple. Okay, the influencers which are there in the market today, who are giving all this kind of information and learnings, what so-called learnings. Okay,
everybody started a classes now.
So how are they earning money? They are earning money through some source. Are they doing it just because they want to spread knowledge? If they are doing it,
I don't think so.
If I start evaluating, I will be able to make out whether they are giving the right knowledge or not. Frankly, I don't.
You don't want to get into. You don't have enough time to do that.
Yeah, to look into all of this. So, if we can understand their motive, okay, if there is somebody really genuine, who wants to really spread the right knowledge, okay, if you listen to them, you will definitely get benefited. But for that, you need to understand what their motive is. Like the lot of names or whatever you have discussed right now. My sense is that most of them are trying to make it into a business model. Becoming an influencer, they are getting paid by somebody to give certain recommendations or stuff. Okay, so if you're going to listen to these kind of guys, then probability of you benefiting in the long run is low. So I would suggest that slowly let your experiences dealing with different investment options, different products, determine how you build your knowledge or what your experiences are regarding those investments. Let them help you build your knowledge. Like, for example, we've invested into mutual funds in the past.
Yes.
You are still continuing investing, but you have seen your investments keep going up and down.
My only problem is money that goes with you as an investment never comes back because I cannot withdraw. That's only the issue I have.
So that is the skill of an advisor, to make sure that you remain invested.
Yeah, because it is that money you advisor is treated as an expense for me. It doesn't exist for me. It has grown multifolds, but now I stopped tracking as well because we started in 2009, so it's 15 years, and I have not withdrawn a single rupee out of that.
Right. So in this experience, have you seen that the value of your investments has
gone down?
Absolutely.
Oh no. So it has gone down temporarily, like COVID times, because I started after 2008-9.
Right.
But that was like, we actually made money out of COVID.
Right.
So you pushed me to invest, and then we actually made money out of COVID. And then keeping it consistently over the period. When I remember telling you that after getting the salary, I don't see anything in the bank. He said, wait for 15 years to see that in the bank. And that is happening. But
so you're financially free now?
more or less. So that was the goal we started with at the age of 50. But with the business going up, with the planning that we did, even with the house,
Right.
where I could save easily by delaying my decision of taking a house by 3 years. I got ready position, so we don't have to worry about when there was no RERA.
Right.
And it saved me about 25%,
Right.
just the cost.
Right. Because we had identified that cycle correctly.
Yes, and there was RERA coming out.
Right.
Nobody predicted demonetization, but GST and RERA was coming out.
Correct.
So that you warned me before there will be rules and regulations. So, like, I booked it out and then I cancelled.
Correct. I remember that.
And then now that confidence has built me, like, where it is to be trusted. And I remember that there was a debate at house whether we need to buy gold or something. Then you told Jyoti that, oh, go and buy this and you don't have to worry about this is the limit I have given you. So that also you advise. So which is looking at the financials and what you have. So that is what has helped me. But in general, having this series dialogue now, it seems that time is very insufficient to have it covered. Probably we'll have to do another session or two
Sure.
to get it through the nitty-gritties of what we do as a stepwise for a maybe first-time investor, and then the probably the next stage was settled in the life. So probably thank you, Sridhar, coming at a short notice.
Sure. Thanks, Yogesh,
Thanks.
for having me.
Bye.